Today, we're going to discuss what the next major market event might look like. And I think zero DT options could play a huge role. These things weren't around during 2020, they ramped them up in 2022. And according to JP Morgan, the next 5% intraday decline could turn into a 25% rout. And I'm going to explain in this video why I think that is not only a potential, but probably likely sometime. I'm not sure, maybe this year, 2023, but I'd say within the next 12 to 18 months, we could see a major flash crash where the market collapses 20% in a day. And we'll get into the different circuit breakers. Basically, once it gets to 20%, that'll end trading for the day. So I don't know that we'll see a 25% decline, but the Black Monday crash of October 19th, 1987, the Dow finished down 22.6% in one day. So I think we're going to see that again some point in the future. When? I don't know, but this could be the reason why. All right. So, what are zero DTE options? Basically, these are options that expire the same day. So they open in the morning, the people buy them, and then at the end of the day, they close, and that's the end of it. In 2005, the CBOE introduced weekly options, and they expire every Friday. A little bit after that, they added Monday and Wednesday. But now in 2022, we have options for all 5 trading days. And we haven't seen a market panic since 2022 that could really exacerbate things. As you can see in the chart here, we now have over 50 some percent of all the volume on the S&P 500 futures are zero DTE options. And this could snowball if we get a large intraday decline, as these market makers have to sell to cover their losses. That'll force more selling and make things worse. Okay, so what would a 20% one day decline look like? Here we have a chart of the Dow Jones back in the 1987 crash. This was called Black Monday. It was October 19th. Prices were falling into this level, but then they hit a crescendo here on the Monday open. Selling started in Hong Kong and it kind of spread throughout the globe, but in this single day, prices were down 22.6%. What would it take to get such an epic decline, one day decline? The scenario laid out by the bank analyst said if the S&P, for example, fell 5% in 5 minutes, which is totally possible, that would trigger an additional 30.5 billion in zero DTE option related trading that could potentially tack on another 20% point decline. To get this sudden unwinding of zero DTE options, we need an intraday decline in the stock market of around 5%. So sometime after the open, prices have to fall 4 or 5% to start to trigger this potential event. The last time we had something like this, looking back during 2020, I think in March we had a few days that were over 5% intraday declines. But the first one that came to mind was the flash crash of 2010. I was watching tick by tick when this happened, and it was May 6th, and it started around 2:42 p.m. The Dow fell 600 points in just 5 minutes. That was approximately 6%. On the day at its peak, it was down 9.2%. But within that 5 minutes, it plunged roughly 6%. But by the end of the day, it had recovered most of the losses. I was watching this as it happened, and I couldn't believe my eyes. Prices just kept falling and falling and falling, and it was incredibly surreal. And there's nothing was stopping it. And I'm like, I thought for a moment it was going to go all the way to zero, so I think that's what this next event might look like. When? I don't know, again, but the potential is there. And I just want you to be aware. So after the Black Monday 1987 crash, they decided, hey, maybe we should put in some things to stop this or to slow this down. So they put in a circuit breaker system. So what they have now is a level 1 circuit breaker would be after a 7% decline, markets would halt trading for 15 minutes. If they continue lower, the level two stop would be a 13% decline. Again, they would stop, halt trading for 15 minutes. And then level three is after a 20% decline. Markets would stop trading for the day. That'd be it. So if it happened at 11 o'clock in the morning or 3 o'clock in the afternoon, they're done for the day. I can't imagine what level of panic that would bring about in the news. So, special to note that level one and level two circuit breakers are not triggered if they occur after 3:25 p.m. So, approximately 35 minutes before the close, they're just going to let the clock run out. Some analysts believe that circuit breakers are disruptive and they keep the market artificially volatile because they cause orders to build up at the limit level. So basically, once the market resumes trading, they are flooded with sell orders. So circuit breakers could make things worse. All right. I think we've established that a sharp flash crash is possible. What would that look like in the S&P 500 if we were to see something like that? I'm not predicting this is going to happen anytime soon, but I do believe within the next year or two, the probabilities are fairly high that we could get a one-day flash crash. As of August 17th, the S&P 500 closed at 4,370. So from this level, a 20% decline would take prices all the way back to the October low in just one day. All of these gains would be wiped out. 9 months worth of rally would be wiped out in one trading day. That's excessive. Now, there's lots of things in the world that can go wrong that don't go wrong. So this might not happen, but the potential is there. We've never seen this level of options traded that expire every day. And I think when this thing unravels, it could do so in an epic fashion. I just want you to be prepared. That's all. If you like the content, hey, hit the subscribe button. Give me a thumbs up or whatever the kids are doing these days. I'm just trying to have fun and make people informed. I appreciate your time. I hope you're doing well, and God bless. Bye bye.